friends, welcome back for a Theory Bob's Technical Analybobs, and let's take a look at the charts together. Now, in the Bitcoin episode, which is a nice one, another nice one, a nice long one, I recommend you watch it. I'll put a thing, a circle thing will appear like here, and you can click it with the suggested title of the episode comes across beforehand, all that sort of stuff. You'll be able to see that and go and check out the other episodes. I'm going to take some of the noise off the chart by not putting the moving averages on today. I've spoken about them enough recently as well, anyway, for people to be aware of the chat with that. And yeah, I want to, in time, sort of remove some of the noise from the chart that we've got because there's too much kind of activity on here, I think, to make things nice and clear for folk. But I'll do that little by little. The Bitcoin episode was an example of me doing it on screen. I do tend to do that, but I might do it off screen when it comes to this extra stuff here. But what are we looking at in terms of the price action? Well, we've kind of come outside of this channel here, which is asking, if we're going to get this big tier on this turtle's right eye and come all the way down towards the $200 potential price target off of the back of this. That's potential targets for us. In the meantime, we've got the turtle guy asking us, hey, are we breaking out or faking out? Of course, fake out off the back of this could take us all the way down as far as any of these sorts of territories here, going down towards the 220 or indeed the 216 area. The 216 area is significant because that's the 236 Fibonacci retracement point. So we want to stay above that to sort of keep this as an invalid Fibonacci retracement. That's drawn in from the highs over here. Let me looking at this now. I'm seeing that kind of seems to tie up with it doesn't seem to be on the wick there. So that's on the wick on that side. Is it on the wick down on this side down here? It's not. That's drawn in neither body to body or wick to wick. I don't know if I just moved that at some point or not thinking or whatever. Let's just kind of go with that for now then and see where is that 215 we'll call it. That's an easy enough number then to remember. So between 220 and 215 is kind of what we're looking for in terms of like pushing this and getting a full Bulkowski measurement on the measured move there, and then asking real serious questions, because closes below 220 would be enough to see us make it down to that 215 area, and indeed breaking on past 215, as you can see with a significant area here as part of this kind of ascending triangle during the price action between and I do know you can hit the lock button on those things and not have these problems, but I just whatever. Let me be. Then in between the 29th of April and over to the 28th of May, when we had this sort of ascending triangle type feature on the pattern on the chart, then moved up towards this next area, and then we've done the same thing over again from the 30th of May up until the sort of latter June period that we're in now. We've kind of just been doing a sort of you could say a descending triangle or various other sort of patterns there. And the question will become, if we go back down below this 215 area, back into this range that was here, could we then see the price action come on down? Excuse the siren outside if you can hear that. Could we see the price action come on down to these areas that we've got laid out below? And the Fibonacci style ones bring us in at 189 and 169, and that's fair enough, because our horizontal lines are coming in at 193, 185, and 175, and of course the invisible ones. Subscribers know that there's been an invisible line on the charts. We've had it talked about 166 so many times, and I can never remember off the top of my head exactly why it's significant. And then I look for reasons why it becomes significant, and then I don't put a line on there and forget why it was. So yeah, subscribers know about that. Anyway, so that's basically what we're looking to, really, unless you want to see the prices moving up the way, and that's totally fine as well. So let's just have a sort of bullish chat on this one then and move on with the other coins that we're looking at in today's episodes. I'm reticent to get rid of Turtle Guy there at the minute. It's just, just so you know, I don't like killing things off so quickly. And it's like that joke. If trees could scream, would we be so cavalier about chopping them down? Well, maybe, if they screamed all the time for no good reason. Yeah. Anyway, so do I want to chop these things down? Well, just because they're mess on the chart, it does make me want to, but they're not exactly screaming all the time for no good reason. They look like right. So bullish case scenario. Yep. Let's bring up the oscillators and remember. Right. Okay. So 4 hour time frame and looking at this and saying, is this lower than, get rid of all the drones, is this lower than is this lower than this one here? It's not quite yet. We'd want to see this actually close a little bit lower, if you're being bullish about this, just so that you could, in the next hour and 20 minutes, just so that you could get a lower low in here that's bullishly divergent to go along with the previous ones, not bullishly divergent, but yeah. So just in terms of this little chunk just here, but then again, if you're bearish, you'd also want to see that lower low coming in. It's just a warning sign. On balance, I suppose you'd be happy enough just to see it closing where it is right now, and then moving towards the top side here. So 227 is obviously going to be an area for us, as we can see looking back the way, these high 220s really have been an area. Breaking down below this area and then getting follow through in the face of whatever divergence there could potentially be at the time, because it's just a warning sign or whatever, would be also the bullish ideal really. And just moving on down below this previous low over here at 222. Of course, bearing in mind again, they know that you'd want to see that happening with momentum. If you break below 222, this is the 4 hour time frame and this is the downward trend. And between this area here and the next followed up one, there wasn't any of that divergence, and you can see here in the stochastics there wasn't either, despite it being on the Bitcoin prices. And between these areas subsequent to this lowest low of this set of lows, you've got these lows here which are higher than it, so you can't look to them and say divergence. So overall, if you're looking for this to turn around at an area, the most sensible sort of, now I'm not a financial advisor and this financial advice, but lower risk areas for taking trades from would be that 222 area, as it was back ages ago when we were on the way up here at the start of the year. And then so 222 would be what to be looking for, and then sort of 222, breaking down past that 220 area, ask questions about or the 215 especially, ask questions about the 200 area, if we'd be going on down to there before seeing a turnaround. So, but if you do want to be bearish about this, then you want to break past that with momentum, is what I was trying to say there, so that these don't become bullishly divergent. That'll do, I think, in terms of looking at this just now. There's no hidden bearish divergence on the go in terms of these highs. This is, and there isn't any sort of bullish divergence. To call this bullish divergence here is premature. Just want to point that out. Between these two lows, that's definitely premature. It's not formed. It's not even lower than the price action. Yada yada. Various reasons wrong with it. If you're going to be really antsy about things as a bull, though, then you can look there first. But obviously, more sensibly looking towards this area, and then the 215 area thereafter, just in terms of just knowing like where your next sort of port or call would be, should that continue on the way down there. Okay, otherwise, you're looking for the bullish prior trend to just continue, and having had, coming up here higher high, that wasn't bullishly divergent or bearishly divergent. You're kind of getting away with things here, but there was a rising wedge in terms of the price action here, and then we broke towards the downside, came up and down, getting into these oversold, overbought areas. It's all part of this. Is this going to add up to being a bullish resetting of the oscillators, or is it just a turnaround in the price action? So to find that out, you're going to have to wait and see how how it actually responds around the levels. And the levels, the key ones, when you're looking in the face of the momentum at this moment, are obviously towards the downside. But I'm sort of trying to swing the momentum of this conversation back around to looking towards the upper side targets. And should we get some bullish divergence here, maybe then we can look towards 230 again. Ask 230 for is that going to be our lower high on this sort of downward trend area? So obviously profit taking happening in there. Looking at where the previous highs were in those 231 areas, that's the next one to look to. Then moving up beyond that towards 233, we'd need to see that be retaken again, then just so that you can have a system of sort of getting highs in which are higher than the previous ones. So this and to move back into that channel with the potential for coming up and trying against the previous real sort of areas. And the previous areas are 235 and 240, so like those are your chunks up the way that the price needs to go. So you're talking like $5 up from now, $5 up from that, and then $5 up from that thereafter, if you're looking for these bullish things to start happening. And you can try and find, obviously, I look for convergence then at that point, and look for like kind of how are we doing, like getting past the neutral line out of the bearish control zone, out of the bearish sort of control zone here in stochastics and whatnot? Are these flipping around again with the DM positive moving above the DM negative and the ADX remaining above 20 to give us some momentum towards the upside or not? And that's going to do everything for today's episode. Hope you followed along well enough with that one, and that's what I'm looking to anyway with Ethereum at the moment. And of course, bear in mind those sort of key levels that we spoke about. And yeah, so if you know a friend out there that you think would enjoy these episodes, please do go ahead and share them with them. Share them with those friends. Share them with them. And I'll catch you in the next episode. It's been a pleasure. I've been Rocky Outcrop. We've been Rocky Outcropticians together. Thank you so much for joining me. And I'm moving on to the next coin. Do watch that Bitcoin video, by the way, that pops up if you want. I think it helps provide context across the market for us. Oh, I didn't really actually mention, I suppose, since I've said bye, I normally do. Here's your measured move here for this thing. Here's the breakout from this thing. Did I mention this? Could take us down towards the 220 area. If you're being Bilkowski about it, then you'd say maybe the 222 area, and that's why we spoke about all those numbers. Did I mention that? Don't know. Does it matter? Does it matter? Not really. We could also even get rid of this bottom line here. There, don't really need that. I'm going to just extend this down the way here for now. And take it from up there and just kind of, just so that people can bear this in mind if you've tuned in and stayed tuned in till now, that actually, there's these other things that are on the charts. It's fairly clear, that's fairly clear, isn't it? Could you force this into some sort of fallen wedge type structure? You'd have to force it at the minute. Instead, it's just looks more like a channel, just really. In which case, coming down towards $200 for a turnaround in these areas would see us getting the full measured move and just remaining within a structure. I know a structure which has taken us outside of a previous structure, but could just remain in place for the foreseeable. So this is kind of like, if you want to be predictive about things, that's how you would do that, whilst from a risk management point of view. Right, great, nice one, excellent. Bonus after bye-byes, always like that. Catch you in the next episode.